So let's talk about post-corona. What are the challenges that companies are facing? What are the necessary investments that companies have to make? How are European corporates positioned? So in a global competition with China, with the US, with other regions, how are European companies positioned? And can we ensure that they actually compete based on the best ideas, the best management, and not enablers like availability of capital or other guardrails that are placed by. So let's talk about the changes. I'm not going to go into too much detail because when you talk about corporates, obviously every segment is somewhat different. But we're currently observing 4 major trends that will simply require a certain level of transformation once we get through the current crisis. One is obviously changes in consumer behavior. Right? So all of us have probably gotten used to ordering socks over Amazon or some platform and not necessarily going to stores. Are we going to go back and buying them stationary, or will we just continue with what we've learned? And if we just think through it, plenty of items have simply, maybe for the better, maybe not, but it's not going to look from a consumer demand perspective quite like prior to the crisis. Secondly, ESG has become even more important. I was one of the people that actually thought that it was a little bit of a hype, being a father of 3 young daughters. Obviously, the idea of sustainability is super key. But I was just worried that after the incredible hype around ESG when last Davos took place, so 12 months ago, I was a bit worried that because of the pandemic, it would kind of take a backseat. And I'm positively surprised, that it continues to be a super important topic for corporates around the globe, not just the E, not just the sustainability, the green, but also really focus on social, really focus on governance, again, which is slightly easier to track, but especially the social element. Do you have suppliers that actually follow everything that you would expect a partner to follow? So again, ESG is something which will require a certain element, certain degree of transformation. Thirdly, digitization, and not just having your people work from home and supply them with laptops, but also simply the way that you communicate with your clients, the way that hopefully you can communicate and hopefully you have functioning audio stations, unlike me. But clearly digitization is requiring massive investments. And fourthly, a term which has, now again, been around for quite some time, but has recently gained relevance, the term glocalization. So the combination of globalization and localization, which has become a lot more important in an environment in which countries recover at different speeds. Just look at the way that China was kind of the first to be hit by the pandemic, but was also the first to get out of it. So what we expect for the next couple, the requirement for many corporates to reorganize their supply chains, the necessity to really understand changing local regulation, the requirement to not just think global, but think in regions, maybe even think in countries, which, you know, for many, especially German corporates, we hadn't quite experienced. Like when you think about many of the companies that are present, you probably would have produced in one part of each region, but the idea that you would have an increase in local regulation, an increase in tariffs, is something. Look, I've been around for 20, and I've just enjoyed globalization and breaking down of borders, breaking down of walls, breaking down of anything which makes global trade more difficult. And unfortunately, I think it's going to become slightly different. I don't think that we're going to have deglobalization. I really believe that you need to continue thinking global, but really appreciate the local requirements. Now, those 4 trends will have quite different impacts on various industries, various segments, but also on companies within each segment. So you will have some winners. So you will have biotech, or you will have a couple of segments that will simply need to scale. They need to invest. they would have otherwise. But those are the ones that actually have nothing to worry about, but cannot just seize the opportunity fast enough. You will have some companies where the business is going to look pretty similar in 2 years compared to 2 years ago, and those just need to kind of get through the current crisis, kind of to preserve liquidity, but nothing changes. You will have some segments, some industries, maybe the car industry, which will be around forever, but it might look different. It will have to transform. It will need to innovate. Certain parts will change, and you will really have an industry which maybe from a revenue perspective in 2025 compared to 2015, but in between it will have to transform, which requires massive investments, will require capital, not just funding, not just senior debt. And again, quite specific to certain segments. Unfortunately, you will have certain industries that will have to de-emphasize. You'll have certain industries that will simply see lower demand, or maybe because of ESG considerations, they're just not favored. And for those, we also, as banks, as countries, as parts of the industry, also need to find solutions to make sure that it's done in a socially responsible manner. I could go on, but I think it's quite important to hear the thesis. The thesis is hopefully quite clear that over the next couple of years, pretty massive transformation investments will be necessary because of changes in demand, ESG, digitization, glocalization, and many other trends. Now the question is, how will European companies do versus US, versus Chinese, versus non-European companies? So are they in a position to really compete based on the best ideas, on the best implementation, execution of business strategies? Or will it kind of depend on enablers? And I will go into detail. Just a quick story that I would love to share. I came into the office to not have my homeschooling kids running around. So I thought it would be much quieter. At least at home, Zoom is stable. So maybe I should have been at home. Anyways, the analogy is one. Imagine a round of poker where China, the US, and Europe play poker. The US is clearly the chip leader. So however much you know about poker, but I'm sure you're going to understand the concept of the chip leader, has the most chips, is aggressive, goes all in, wants to force decisions, is confident, and really feels like they're winning. China is like the wealthy, successful millionaire that's playing poker with old friends from university. So you're happy, you play along. Sometimes you go all in, sometimes you fold. You don't really have, one clear strategy. However, you know that you have the deepest pockets. You know that you're the most successful. You understand that over the course of an evening, you will win. There's no pressure to win now. You will win eventually. 1.4 billion people. In the long run, China is going to be the biggest economy by any measure. So they are patient. Now, Europe has read every single book. So Europe has written every single book ever written on poker. Europe knows all the pot odds in its sleep. Europe knows exactly what to do depending on what the US has done, what China has done. So Europe has perfect knowledge over the game of poker. Now, Europe never bluffs. Europe also doesn't think that anybody else is bluffing, and Europe always plays rules-based. Now, if you had to put your money on Europe, the US, or China to win, who would you bet on? Now, what's going to happen is that Europe will come home at night after the game, probably having lost because they didn't bluff. They didn't quite really follow the rules. And Europe is going to tell their spouse, look, I was the best winner. I played it right. I played according to the book. This one guy was simply way too chips early on. My friend China, they have the deepest pockets. I was the best player. I just didn't win, but who cares? I was the best player. And that is something, and we have many people watching, so I probably need to choose my words carefully, but that irritates me at times. So it irritates me sometimes that it feels that Europe is not competing to win, but wants to play the game according to the rules. And rules are important, don't get me wrong. that everybody can anticipate your next move. You don't always have to follow every single historical way of doing something. If your competitors aren't, right? I mean, it just doesn't feel good to maybe not come first place, but kind of feel that you were the best because you played it the right way. And so when you think about what European companies require in the competition against non-European corporates, we could go on. That could be, hour-long discussion. I'm just going to highlight a couple of items. One is clearly availability of capital. Now, I'm a bank. I understand. We finance corporates. We should finance corporates. We can really only provide senior debt. As a bank, we're not in a position to provide equity. We just cannot. We can provide mezzanine capital, but even that is difficult simply from a regulatory perspective. So when you think about industries that have to go through a proper transformation, they don't just need senior debt. They need proper equity investments. Now, when you think about the European market versus the US versus the Chinese, the US has a much deeper, much more differentiated market where pretty much for any type of risk, you will be able to get capital from private investors, from hedge funds, from whoever. Now, when you look at China, you have available because in China you have state-owned banks, you have plenty of promotional banks, you have direct involvements by states, by cities, and it's an environment in which they have a very long-term view. There's nothing wrong about it, right? I mean, they have a strategic view in certain industries, and it doesn't need to pay off tomorrow. It can pay off in 10 years. So when you think about the availability of capital, European corporates really have senior debt available. They could IPO, and of course, quite a few are publicly traded, but much fewer than when you compare to the US environment. The second point, when you think about payments infrastructure, and I will keep it brief, but when you think about payments infrastructure, you have to differentiate between the currency in which you trade, and let's call it the gates, the rails. So who controls the way that money moves from A to B? Think of the following analogy. If the pipes in your house, so your water pipes, if you didn't own them, but let's just assume your neighbor controlled them, would you feel comfortable? Right? You like your neighbor, who cares? I mean, your neighbor controls your water pipes. But what if you ever fight? Like, what if you ever fight over, I don't know, cutting back the trees or something? Would you really want to run the risk of your neighbor say, you know what, it's enough, no showers on Wednesday? Now, that's the position that Europe is in. Most of global trade is denominated in dollars. When you think about the way that we pay as retail consumers, we pay with Amex and MasterCard and Visa and PayPal and Apple Pay. I mean, they're all good. It works. I'm happy with my PayPal and Apple Pay and my MasterCard. But there's no European mechanism. We have our Giro card, which is fine and it works perfectly in Germany, and we have similar setups in other countries, but there's no European equivalent to any of those US ways of paying. So when you think about the competitiveness, and I think it became clear in situations where the US would apply sanctions and Europe would say, no, please continue to trade with that country. And I'm sure that one country comes to mind when you think about it. It's clear that the US won because they control the dollar. And no corporate, no bank wanted to be viewed to violating US sanctions. Now, I don't want to debate who was right, like whether it was the US, whether it was Europe, right? I mean, that's not the point here. But it's pretty clear that global rules on who is considered a good partner are set by the US and not by Europe. Again, that doesn't matter as long as we're all friends and there's no fighting over cutting back the trees. But just imagine a situation in which it became an issue. We just do not control our own destiny when it comes to payments, rails, and the currency. There are good changes. You may have seen what the European Commission published last week. So they're definitely thinking about it. They're definitely taking many steps in the right direction. Disadvantage that European corporates are facing versus non-European corporates. When you think about IoT, and I'm not going to go into too much detail given the time that has already passed, but the data of consumers in Europe is completely owned by US companies, right? The GAFAs, the Googles, the Amazons, the Apples, and so on. I don't care too much, as an individual, because Amazon and Netflix and Disney Plus, they have a good understanding of what we like and don't like, so therefore it's convenient. But should the same apply to corporates? So would we also want US companies to dominate IoT? Would we also want to be in a position in 10 years to look back and have to realize that despite all of the good things that we have in Europe, the internet kind of won, meaning the internet and who was able to connect it because they have scale and cloud technology and so on, kind of controls the Internet of Things, and therefore also the way that the things, the products, the good ideas that we have in Europe, how they're interconnected. Fourth, when you think about regions, think about what's happening in the Middle East. Think about what's happening in the Middle East, where the US is kind of pulling out because they don't have the same dependency on oil. I haven't seen Europe step into much. I've seen many contracts, many treaties between China and various countries in the Middle East. When you think about Africa, and I want to be careful, this is not a discussion on, of course, I'm debating geopolitics, but please, this is not like a geostrategic point I'm trying to make. It's more, what are the markets that corporates can compete in? And over the last 10, 15 years, Africa has really been dominated in terms of partnering with China as opposed to with European companies. Many reasons for it. But again, it's a fascinating, growing continent. And I don't think that Europe should give up on it. That's maybe too big of a term, but when you just think about the imports, exports of African countries, who's financing infrastructure, it's no longer European companies, but Chinese. So how do we bring it all together? And I realized that I made a bunch of somewhat big, hopefully somewhat thought-provoking statements. But how? I think the challenges that corporates are facing are pretty similar across the globe. Of course, you will have, recoveries will kind of look a bit different, but generally speaking, corporates in Europe, various countries in Europe, in China, in the US are facing pretty similar challenges over the next couple of years. Pretty similar requirements of transformation and so on and so forth. And my honest perspective is that the competition between companies should be decided by ideas, should be decided by innovation, should be decided by the best execution, the best implementation, the best management. They should not be decided by what you could consider enablers, right? So availability of capital is an enabler. Having certainty over your payment infrastructure is an enabler. So what I would love for people to just think about is, firstly, in those areas where Europe has upside, Internet of Things, where we have the things, regions that are looking for new partners, we should seize it. So we should go all in, if we kind of go back to poker analogy. In situations in which we kind of have where we have a disadvantage because of the structure of our capital market or other, the payments, it simply needs to be addressed. And what we shouldn't do is kind of just say, well, this shouldn't matter. Why, let's not assume the worst. We're all friends globally. I think for those enablers, it's just important that companies, that corporates are enabled to compete based on ideas and not other considerations. So with that, I would love to start a discussion. Hopefully it was not too irritating that I had to go back and forth and mute or unmute myself. Really enjoyed the invitation. Thank you so much. And would love to have a discussion.
There were actually two questions which I think are interesting. The first one is how must medium-sized family businesses in particular position themselves for the future? More expansion in overseas or stay at home? What is your opinion about that?
I think it's a good question. So I don't think that I'm in a position to consult or lecture. Every company that we have attending, and obviously, the company that you're running is really successful. I think maybe just a couple of thoughts. I think you always have to balance FOMO, so fear of missing out, and not invented here. And I have to admit that I struggle with that. So when you see competitors do something, when you see a hype about going into a certain country, going into a certain new space, certain innovation, you cannot just...
You're on mute.
I shouldn't be, at least. Can you hear me?
Yes.
Can you hear me now?
Yeah,
we
great.
do.
Can you? Okay. So my point simply being, you need to follow what's happening. You need to be able to be nimble. So the not invented here is really dangerous, but also not just do something because it's being hyped. And again, when you think, especially at European companies with a lot of tradition, we have a tradition of innovating, but also implementing and executing. And I think that's something that we should continue. Now, however, I think you have plenty of markets which I find quite exciting. India definitely being one of them, ASEAN, so Vietnam, Philippines, and it really makes sense to understand the nuance of all of those countries. I think those offer great opportunities for new partnerships for new markets.
Thank you very much. Thank you. And if we have a little bit more time, I think the second question, in your opinion, what are the 3 key factors that every company has to bring with it in order to remain competitive? Very global question, but from your perspective.
It's also a good one. Again, I don't want to be careful to not come across as the teacher who's telling very successful companies what to do or not to do. What I've seen when speaking to what I've seen when speaking to companies across the globe is that the US tends to just try things faster and is really rigid, really specific on implementation. I think Europeans are quite good in analyzing and thinking it through. Maybe sometimes they could be faster in implementing. So I think the idea of just trying things out, but then also making people accountable. So not treat things as a hobby, some new innovation that you might or might not invest in. I think the combination of, well, properly analyzing, but then when you see the glimpse of something starting to be relevant, making people accountable and kind of going all in. And then if you look back and, maybe you fail fast, right? And take away some lessons learned, but don't worry about it. What I sometimes feel as a European, and, applies to, definitely to my institution, if we're self-critical, I think we've seen quite a bit of trends. We spread too thin. And then in hindsight, you never quite know whether you could have been successful if you simply had focused on fewer individual items. Right? Let me just give you one thought that I'm personally struggling with. Imagine you have imagine you had 100 to invest. Let's just imagine you invested on audio technology, which I'm definitely going to do. But imagine you had 100 to invest. And there are 4 different new ideas that you could invest in, new countries or whatever it might be. And imagine it would cost you 25 to kind of be in the game, and it would cost you 50 to crush it. So you know that if you invest 50, you will be number 1 in this thing. If you have 25, you're kind of competing. What are we going to do? You have 100 to invest, 4 different ways of doing it. Now, unfortunately, what's happening in many companies is that you invest 4 times 25 because you don't want to miss any single item. Or you have people managing your businesses that And what that does to you is that you're trying really hard to be mediocre, because you're trying really hard to be mediocre in quite a few markets, which is just not the way that companies should be set up. Again, I'm not criticizing, I'm not consulting, I'm not addressing companies this fair, but generally speaking, I see European companies try too many things and spread themselves too thinly, and then maybe kind of regret it later, because you could have been number one in a couple of markets if you had just had this all-in mentality. Let me just leave you with one quick thought, which really came to mind when I was watching what you've organized. And I think I'm plagiarizing Ayrton Senna, the Formula One driver, who said that it's very difficult to overtake too many cars when the sun is shining, but you can overtake 10 drivers when it rains. And so what I find impressive about what you've pulled off here is it currently rains. Right? There's no question that it rains. But you've shown the willingness to innovate and the tenacity to actually still pull this off. So I think you're overtaking competitors or maybe other industries by just being willing to risk something in the current environment. So well done, and thank you for the invitation.
Thank you for joining the team.
Thank you.